The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 36, Nasdaq's down 15, S&Ps are up 650. Gold contract down 570, trading at 1546. You got silver up 5 cents, $18.21 an ounce. Light sweet crude up $1.50. $56.40 a barrel, and we got our first named hurricane coming into Florida, folks. So we'll see what happens. It's heading to the East Coast at this particular point. Notes and bonds, bottom line is Eveready Bunny. They just don't stop. 10-year up 6 ticks, 131.10. 30-year up 19 at 167.03. King dollar up 233 ticks, trading 98.140. You got the euro at 110, the pound is at 122, and the yen is out here at 105.92. Tom O'Brien, what's going on?
Good morning. Another day, and where do we start, man? Action all over the place again.
I think, we can start kind of over in London, because this is going to be pretty wild.
Right.
You had the British pound, folks. The British pound rejected lower price out here this morning. It's pretty wild. And you get Boris Johnson, the Queen just went along with the suspending the legislative, their parliament. So the bottom line is that this harder Brexit is going to be coming at us. Pretty wild.
Definitely.
Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, you want to get a great show. You want to understand defined risk, options strategies, futures, all the above, every trading day right here, 11 to 12 Eastern Standard Time. Great program. If you haven't test-driven yet the Thinkorswim platform, it's really easy to do. As you're at TFNN, hit the banner, bring it up, open up that account. They'll allow you to trade with paper money. You can follow Kevin and his team each and every day. Kevin Hinks, what's going on?
Good morning, guys. How's everything? You know, you guys made a statement. Boris Johnson, that's playing a little hardball.
Oh, my God.
Parliament.
Seriously.
That's for sure.
And you know,
here's the thing, and Ben Lichtenstein and I talked about this morning. This dip in the British pound that was this morning that is now failing might be the right trade, because if Brexit happens, right, and goes off less than a disaster, you've got to think the British pound's going to rally off of this.
I agree, Kevin.
Right. So, I mean, this dip might be one for buying, because look at the chart the last week or so, and the British pound's been pretty strong. This was a big break in the British pound. I think that's why there's some people nibbling on this sell-off here for sure.
And, you know, Kevin, yesterday, and Tommy, yesterday in the afternoon show, I went through the aspect of, you know, when you take a look at this pound, I mean, we all got to get much better at currencies, because the amount of wealth in your currency, folks, is huge. And when you take a look at this British pound, I mean, this is hard to comprehend. You know, in 2014, okay, the British pound was at 170. So, you know, what that specifically means, folks, is that the bottom line is that if you had 100,000, well, if you had 170,000 pounds, okay, bottom line is that's 100,000 US dollars, okay? Well, just the opposite, rather, okay? Now what's happening is that 100,000 US dollars is only 122,000 pounds. So what happened to that 50,000 pounds you had from 2014? You know, now that's granted if you're using it out of the country, but that's a huge amount of wealth lost.
Exactly. I mean, and that is one of the reasons that you can say that the U.S. dollar has remained high for so long, not only gone to these levels, but stayed up here so long.
I know.
So any, you know, resolution in Brexit, which frankly we've been waiting for years to happen, if Boris Johnson is committed, which it sounds like he is, this could be a trade in the British pound and the corresponding U.S. dollar that everyone has to pay attention to.
Yeah, there's no doubt. You know, you talk about starting to pay attention. Premiums, well, I'm not, maybe it's not premium, maybe that's the right word, but the VIX, this is staying kind of high, Kevin, isn't it, for the kind of market we're in?
Well, I mean, all you have to do, Tom, is look at the percentage moves on a daily basis, and that justifies a VIX at these levels.
Yeah.
If not a little bit higher, frankly.
Okay.
But
Yeah.
I think for where we are, in terms of, remember, we're Wednesday heading into Labor Day.
Yeah.
So you are going to get less and less eyes on this market for the rest of the week. Even though we have GDP on Thursday, personal income and outlays on Friday, we still have some earnings the rest of the week to take care of. We still have a long way to go, but less and less people are going to be watching this market the rest of the week. But I think if these percentage moves keep up, this VIX is going to go higher, not lower.
Yeah, no, I can see it. What is, I guess when we have even a flat market now, or just up a little, it refuses to go down. So it's saying, okay,
Right.
people want premium now, right? They want premium.
Exactly.
Yeah, right.
Exactly right. I mean, the fact that, yesterday the market was firm in the morning, right? It broke
Yes.
later in the day, really, I thought, led by the Russell. The Russell
yeah.
really weakened all four indices yesterday because it made the biggest move driven by regional banks because of lower interest rates. That weakened the Russell. The regional banks are such a big percentage of the Russell that I think the regional banks weakened the Russell. The Russell's big percentage move weakened the rest of the indices, and I think that's what happened yesterday, and that's purely a function of low interest rates.
Yeah.
It's going to take its toll on these banks for sure.
No, there's no doubt. And, Kevin brings up a huge point, folks, because the Russell made its high a year ago, exactly a year ago this week. So it's like, the NASDAQ, of course, the S&P 500, the Dow Industrials, they're all, they made their highs not last year, only a few months ago. So that is saying quite a bit. And I guess these interest rates, I mean, now we have a real inverted curve. I mean, it's the first time. It's the first time I think I've seen the curve inverted for over 24 hours.
And
right
here's
now,
what I think that the key is there. I think the key is, I don't think Jerome Powell's worried about the interest rate or the yield curve inverting. I think Jerome Powell is worried about it staying inverted for a long period of time.
Right.
So I think that's what, if the longer this stays inverted, the closer we are to getting a in-between Fed meetings rate cut.
Ooh.
And that's
Oh, boy.
what you'll think, I think, start creeping into the rhetoric. If this yield curve stays inverted like it is, he'll make a move to either steepen it or uninvert it his own way, which is the only thing he can do is lower short-term rates.
Yeah.
Yeah. And folks, as Kevin brings this up, we talk about defined risk a lot. Kevin and his team talk about it every day. Watch the program, because let me tell you something. If we get a midway rate cut, you will see this market explode. And
I couldn't help it. That's why I was like, oh boy, here we go. But it's a great point. And I was reading, I think, 4 different articles last night talking about yields. I mean, the S&P dividend is above like the yield, right? I mean, they're just everything. It's just amazing where we are.
Yeah, I mean, and that's going to stay the focus. And, the pressure is on Jerome Powell a little bit right now, because even though he can claim that the U.S. economy is still very healthy, consumer confidence yesterday, very good number, but he's got world yields low. Yeah. He's got an inverted yield curve right now, and he's got bullets.
Thanks so much, Kevin. Have a great one. Have a safe one.
Thanks for having me on, guys.
Tommy and I
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Tom and Tommy O'Brien. We do appreciate you growling and prowling with us out here. We have the Dow up 33, Nasdaq's up down 13, S&Ps are up by 6.5. Let's go over to that oil contract, Tom. So
yeah, quite a move, right?
That's quite a move. Now, yesterday, look at this though. Oh no, wrong contract. CLV. We're on the V. Okay, so you got 317,000. Now this gets interesting, folks, because that's not a lot of volume coming in, particularly because I can understand why it's happening, because what's happening is that you get a hurricane coming into Florida, and it's not necessarily going up the Gulf Coast, it's going to the East Coast, but guess what?
Yeah.
Those things can turn pretty quickly.
That's for sure.
You know, we'll see where this shakes out, but that's coming into that swing point, dramatically lighter volume. Let me go see what the XLE is doing out here. Yeah, the XLE can't move. And what we did have last night is that we'll have those oil numbers coming up, but the API last night came in with a monster drawdown. It was like 11.2 million barrels, I believe.
Okay.
Now we'll see what they're looking for, but that itself, folks, moved oil about 10 cents. But not as it started moving basically this morning. You know, so we'll see where that's going to shake out. But a lot of moving parts here, and of course, what ends up happening is that you're kicking into the end of summer trading, even though it's not the end of summer. There's no doubt about that. So we'll see where this baby shakes out. Autodesk last night came out with numbers, folks, and this little baby got a haircut and a half. It's down $18. You get an ABC down, took out a B point, took it out with volume. And, you know, this has been a rocket ship, there's no doubt. I mean, take a look at this. You go back to 2011, you're at the $25. You go all the way up to 178. It's coming back to the lower end of, looks like a high-end consolidation. And what that was all about is that you had, they made their second quarter, their third quarter, they're saying that it's going to slow down pretty dramatically. So we'll see where all this baby shakes out. Silver. Let's go take a look at silver a second. So silver finally caught a bid And it looks like platinum, Tommy, also is starting to catch a bid. So
Okay.
silver, so check this out, folks. I mean, in the last 4 days, silver went from $16.96 up to $18.45. That might not seem like a lot, but that's a monster move. You know, it looks like silver's making a run right now for that $21 area. And with that $21 area that is your swing. Let me get the generic one up here, SI1. That is the swing point from 2016. And there we go. Yeah, that number is 2109. 1875 is going to be first, I guess. 1875 is the low of that. But you can see that bar. That's a good bar coming into it.
Huge moves, yeah.
Yeah. You know what's so cool, Tom, is that we have Teddy Cakestat on today, too.
Yes.
Especially because of the pound. So,
Right? I know. I saw that headline this morning, man. Why not? Bring the queen into the fray. Get her in there. Let's go.
And so here it is, folks, okay? Queen Elizabeth approved Boris Johnson's request to suspend Parliament for almost 5 weeks ahead of Brexit. The Prime Minister move sets up a showdown with lawmakers who want to block him from taking the UK out of the European Union without a divorce deal. Now, it says here the pound dropped. Guess what, folks? The pound dropped, but it rejected lower price. You know, just as Tommy, Kevin, and myself were talking, and we'll have our man, Mr. Teddy Cakestat, walk us through this thing, but this, you know, when you take a look at this pound looks like it wants higher price, man. It's like, okay.
And I wonder how that works with her, quote unquote, approving it, whether it's not to call it a rubber stamp, but it seemed like when the request was made that the market didn't wait to see whether she was going to approve it. So I wonder if that's just something that is more procedural. Once a request is made, that it's a request that the Prime Minister is usually given deference to, or
I think it is procedural,
Yeah, as to something that once the request is made, that it would be extraordinary for her not to approve the Prime Minister making that request, because the Prime Minister is the one who is the elected official of the people versus the Queen being kind of the figurehead that's not supposed to be in the political fray. So I believe that's just kind of her approving as would always occur, which is why you saw that reaction the moment the request was made public. Yeah,
and what it's called, folks, is the Queen's speech.
Okay.
So what happens is that I guess the way it was going to work is that they come back to work for 2 weeks, and then they had a few weeks off after that anyway. So he just requested a Queen's speech, and so what that does is that kiboshes everything.
And they're saying in the Den, not elected by the people. And you're right, he's not elected like the president, but he is the elected official, as in by their parliament, as in he's the one that's accountable politically, as opposed to the Queen, that's kind of just a figurehead. And
no doubt. Yeah. And, the euro, now both of these, this is where this is going to get interesting for the dollar, folks, because both the pound and the euro, at good lows, and it doesn't mean they can't break the lows, but, the other side of that is that, okay, how much more wealth is going to get destroyed as if both of those were going to go to lower price. It's really hard to wrap your head around, man. It's not like... That pound deal, man. I mean, when I went through that pound deal last night, so watch this. We'll just do this again quick, folks, okay? This is really... Now, this is not bad if you're staying in your own country, okay? Some things can get more expensive, but if you're moving money around, you're going to see that it's pretty intense. I mean, you only have to go back to... Well, look at this. You can go back to April of 2018, right? And... what would end up happening is that 100,000 U.S., bottom line that 143,000 pound would be 100,000 U.S., okay? That's in April of 2018. That's when the pound was 143, okay? So $1.43 to each U.S. dollar, okay? So watch. If you're a UK resident and you had investments in the U.S., now you get 122,000 pounds if you convert it back. So it's like, 20,000 pounds just went south. And that's a big number, man. It's 15%, right? It's about 15%, in the course of a year and a half.
Yeah.
It's when you start wrapping your head around how this works, and so, of course, folks, if you're taking a vacation, all of us, we should go right now because, and it's not that the dollar index is at all-time highs, but going against those different currencies, the dollar is worth a lot more money than it was a couple years ago.
Sure.
And it's not even because the dollar index has changed. It's more so because those have gone down dramatically against the U.S. dollar, period, which is pretty wild, man. I mean,
seriously.
You go over to the euro, and so put this back 2 years. Yeah, look at this. So 100,000, same date, 100,000 U.S. in February of 18 was worth 125,000 euros. Now it's 110, so 15,000 euros went south. Right?
Yeah.
That's pretty intense, man. Stay right there. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 38, Nasdaq's down 16, S&Ps are up 5. Now, this is kind of intriguing, folks, so check this out. So, Hecla Mining, this little baby has been in the dumps. So let's take a look at this. I just saw this come across the Bloomberg. So, Hecla Mining, the low for the year is $1.21. The high's $3.12. Now, these mining stocks, folks, many of them have gone up really good. Hecla's not one of them. Heckler's trading right now at $1.83. And what has happened, what this headline's about, Tom, is that look at this option volume. So trading in options of Heckler Mining rose to more than 6 times the 20-day average for this time of the day. Option trading at 10 a.m. in New York totaled 4,829 contracts versus an average of 759 contracts, okay?
That's a staggering number of contracts for a stock trading at $1.80.
Isn't it?
Yeah.
Okay. Calls reached, so look at this, calls reached 4,754, open interest 147, puts 75 contracts, open interest of 32,000.
Everybody buying calls, nobody buying puts.
Yeah, the most active. So here's the most active, folks. You get September 20th, $2 calls, 2,106 traded, 250s 1,000. Okay, so let's go see what these cost right now. Okay, so September 20th, strike price $2. Okay, so let's see what they're paying for it. So you're 17 cents away from it. September 20th, $2. Okay, and they were like
10 cents.
Yeah, that's 10 cents. There it is, the last 10 cents. So you're paying 23 cents.
And look at that volume, 26.28. It's going up, I think, since that article.
Right. So, that's September 20th is a long time, actually. I can see that. When I was first looking at that, I was saying, okay, is this one of these deals that you'd like to look at the, is there a takeover going on? Do you know what I'm saying? But I can see that as a trade. You're close enough.
I was just going to say, it's basically 3 weeks. So we come back on Tuesday, September 3rd, to start trading in September. And then the 20th falls on exactly the third Friday, of course, of the week. So you technically have 14 trading days in September. And we got about 3 left in this week, Wednesday, Thursday, Friday. So 17 trading days. And you got to reach about 210 for your break even. So that's 27. When you start doing it, though, right? So that's 27 cents becomes your break even above where you're basically trading at on a $1.80 stock. Man, you're talking about a 15% pop in the price within 17 trading days for break even. That seems appropriate, but man, you just look. What did it just move from? $1.40, right? So huge move. Yeah.
No, totally. So we get the numbers, Tom.
Okay.
Let's take a look at this. So let me get. Okay, so here we are. Here.
Big number, man. Go for it.
Well, you had crude, a drawdown of 27,000 barrels. They were looking for the medium estimate, folks, is a drawdown of 2.8 million.
Yeah. Look at the gas, right? Decline of about 2 million barrels. The estimate there was only a decline of 400,000.
Yeah.
Distillates, a decline of 200, and that's probably where a big portion of the mix, because it's 3.4 off. Distillates saw a draw of 2 million barrels. The estimate was for an increase of 1.4 million barrels.
Yeah. That's a trip, right?
It sure is, man.
That's a big number, man. That is definitely a big number. Now, crude had already been up, folks. So it's not really basically moving that baby much, but that's certainly a big number. And the distillates is like a monster number. That's
yes.
And distillates, folks. Okay, so distillates is jet fuel, is diesel. So that. And heating oil. I can't picture using heating oil right now, but I guess the diesel and the jet fuel is a big deal. So
sure.
Everywhere you seem to look, these planes are full. There's no doubt about that. They're bringing basically numbers to the bottom line. And okay, so hey, let's go over to platinum. So check this out, folks. Platinum. Now, I'm not quite sure what got this thing moving, but you get some movement out here today, and you get volume behind the move. Platinum is up $30. This has been the laggard when you take a look at platinum and gold in an extraordinary way. Now, that being said, you're taking out a B point today. You're taking it out with volume, so you get an ABC structure up. Let's see. So you got 889. You get 793. So you got 89, 90, $95. Which would get you $930, and you're at 895, 898 right now. So this is going to go for the swing point up there at 925. Let's see if we get. Yeah, doesn't say much. You know, bottom line is they're buying it though. You know.
Can we check out Tiffany's? I know they
Yes.
came out with their earnings as well. They're up about 4%, I think. Looks like the jewelry sector doing okay for themselves this morning.
Yeah, the low's 73, the high's 138. This is trading up 330. Oh, and it needed it. Oh, look at this.
Right?
Look at this too. And you know what, folks? This went to a low, took off topside. And if you happen to be a candlestick charting person, you're gonna love this. I mean, that is a really nice signal on a candlestick charting. That is a monster bullish engulfing. This is just engulfed, going all the way back to August 13th. It closed. Wow. It opened lower. It's higher. And so let's see what they had to say. It's pretty impressive that Tiffany can be making money where. Okay, so let's see. Their sales. Okay. Though the comp sales are down 4%, but I guess the market was looking for more. Earnings per share, they were expecting $1.17. They did $1.12. Their second quarter's sales was $1.05 billion. I guess they expected a lot lower, Tom. That's what must have happened.
Yeah, I know. I'm scanning your screen as you have it up there. I hear you. There's not. I guess earnings per share $1.12. The estimate was $1.05.
Yeah, so that's up.
They beat by 7 pennies. But I see what you know. It's nothing too staggering. So maybe the market was a little worried. Of course, it's pulled back somewhat. Yeah. And maybe they're saying, okay, they're bringing some cash to the bottom line here, and they're bringing more than we might have thought.
Yeah, and they still see. So check this out. They still, at the end of the year, they're still going to have a free cash flow of $400 million. I mean,
not bad.
Yeah, seriously. With $400 million, folks, okay, you can. There's plenty of marketing money there. There's plenty of dollars you can do something with to get more business. But that is impressive, particularly because the Hong Kong aspect. I mean, you know, Tiffany's is one of these brands in the world that is iconic, but in Hong Kong, they depend on a lot of Chinese consumers coming into Hong Kong, buying, you know, everything they sell. There's no two ways about that. Stay right there, folks. We got our man Teddy Cakestack coming back. We are going to go over the currencies. Dow Industrial's up 69, Nasdaq is down 5, S&P's up 8. Tommy and I come right back, folks.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Appreciate you growling and prowling with us. We have the Dow up 108. NASDAQ is up 6. S&Ps are up 13. And we get our man, Mr. Teddy Kagstad, up as we do every Wednesday at 40 past the hour. You can reach Teddy, folks, every trading day at forex-trading-unlocked.com. That's forex-trading-unlocked.com. Teddy Kagstad, what's going on?
Well, we have a kind of a quiet day in the currencies now. They actually had some nice movement overnight. And I have a word for you guys. I don't know if you know what it is or not. I learned today. Do you know what the word pirogue means?
Perot?
Pirogue, yeah. Boris Johnson issued a statement. He's going to about proroguing Parliament. So pirogue means to suspend either a parliament or a legislative body for a period of time without dissolution. So as we move forward towards Brexit, after Boris's trip to Europe and the G7, he came out with last night that, he's going to shut down Parliament to make Brexit happen on the 31st.
I know, pretty intense, man. Like, I have the chart up, Teddy, of the pound, and, you know, I mean, looking at this is like a rejection of lower price. It's like...
Yes.
Yeah.
Now you notice on the pound, they had a higher move high yesterday.
Yeah.
This morning they tanked, and now they're kind of in the middle of the body of the session.
Yes.
So I think that what we have is, now we have a couple of things going on. On a fundamental technical basis for intraday traders, we have a new higher move high on an intermediate term and short term that was set yesterday. And then today with this slide, there was a pretty big range between yesterday's high and today's low.
Yes.
So I think those are the two key pivots. I think that the break that we had was an initial knee-jerk reaction to the news, not necessarily meaning anything about direction. But I think that because we have the end of the week, end of the month, end of the summer, and we're starting out with the last month of the quarter next week, and we have a holiday market. So what does that mean? I think that Boris put the line in the sand a couple weeks ago, and then he really put a stamp on it last night, saying that, yeah, Brexit's going to happen, like it or not. It's going to be hard, but we're going through it full throttle.
It's going to be wild watching this thing shake out, man. I think all of us, Tommy and I were talking about this a little bit earlier, like, okay, you know, asking the Queen, okay, let's have a Queen speech, suspend this deal. And the key behind that, folks, is that the Parliament won't have as much time to basically go after Johnson, right? That's kind of how this shakes out, right?
That's exactly what it means. So, and I think that right now you have some key numbers that are coming out. So I think the next couple of days are going to be pretty much quiet, maybe some a little knee-jerk reactions. For the U.S. dollar, we have GDP, and we also have the GDP for Canada coming out over the next couple of days. So the Canada looked like it was starting to run out of gas, and then now it looks like it's got a little spark with some bullish momentum. And we'll have to see how the GDP numbers pan out, because we know that we're kind of through the tit-for-tat trade war thing with Canada. And then the G7 thing, the one thing that did come out of it is we have the Japanese yen, which set us a buy signal yesterday. And I think that's because we now know we're going to have a trade deal with Japan, and it's going to be favorable for the U.S.
So then you think the yen will get weaker? Is that what you're saying?
I think in the short run we're going to see. There was 2 days ago we had a piercing line buy candlestick buy setup, and
yeah, it went right into that crash day, right, of the January.
After follow through from Friday, exactly. And the thing was, Friday, it looked like all of a sudden that dollar weakness was really going to prevail against the yen, you know. Then we gapped open lower on Sunday, and then boom, we had this big turnaround, you know, on Monday. So I think that kind of is putting a short-term bottom in for the yen. You know, I'm not trying to pick a bottom here, but I think in the short run, because of the trade deal, we're going to see a little bit of a rally in the dollar yen trade. And the buy signal right now is conveniently arriving at this time. So I think that's where you're going to actually get a signal and maybe some sort of a trend over the next week and a half. But the other markets, I think the U.S. dollar Canada pretty much is going to be sideways. The U.S. dollar Swiss, because of this new Brexit information, I think you're really going to start to see nothing happen in the currencies in Europe for the next month except for the pound.
Yeah. You know, to stay with this yen for a second, I mean, this is a classic technical deal. I mean, you bring this back, and that the yen had broken topside in November of 2016. Had some strength. That's when it got through this, you know, the 101, 102. And the last 3 times down here, you know, right from, January of 2018, this is where it has stopped, there's no doubt. Interesting. Yeah.
Yeah.
So what do you think about the euro? It's going to be interesting, man, if the euro's still hanging at these lows. And some days it almost looks like the euro is weaker than the pound.
Sure. Well, you know, it's funny, like, you look at how the pound has had its reaction today off the news. The euro's range today is slightly lower right now as we speak. It's not very big of a range, and even yesterday's range was really tight. So I think that the euro has its issue as far as fundamental numbers and stuff like that. They actually have their unemployment number coming out, which is really big for the EU. If that starts to show an uptick in unemployment, then we are really going to start to hear more buzz about there becoming a slowdown and actually maybe a recession coming on into the EU, which is a big deal as we go into Brexit, because we know it's going to be a hard Brexit now. So the EU, since they're not coming to the table, I think that it's going to be a sideways trade for the next, basically going into October 31st. I mean, we've been in a sideways market in a $3.50 range now for 4 or 5 months, and for 8 months we've been in the $6 range. With all this news, with all the Brexit talks, and even what's going on now, it doesn't seem to shake it up. So I think that we're going to see a breakout after October 31st. Which way, I don't know yet, but until then, I think it's 113, 112 half is the cap, and it's pretty much going to probably be bobbing around 111 even handle, 110 handle for a while.
Yeah. These currencies are moving around. There's no doubt about that, man. I mean, and it's intriguing because it's not like the dollar index has really moved around a lot. I mean, it's between 94 and 98, right? You know?
Right.
It's like it gets above 97, 715, has no juice. Gets below it, has no juice. It's like, okay, just kind of laying out there.
And that's what kind of worries me, Tommy, is that because the dollar index is starting to kind of plateau and set kind of a range, is the dollar going to turn, or is this just a basing before we get through Brexit? That I don't know. I think, but right now it might look that, and it would be good for the U.S. if we have a weakening dollar, but I don't know if that's going to happen yet. Probably earnings have to come out really strong in September to drive something like that.
Yeah, I'm telling you, man. It's going to be this hard Brexit's going to be.
How about this guy? I mean, this is the one good thing we have is we have transparency now. With the Bank of Japan, we know how their stance is, so that we know where we're standing with that currency. You know, U.S. dollar, Swiss, we know where we're at. And now with the pound, I mean, this guy's not backing off.
No.
He's just not. There's no way that this guy is a force to be reckoned with. And I mean, I don't know much about the UK. I've never been to London, but, you know, the American impression of the English is they're very reserved and kind of quiet. This dude is not that.
Folks, every trading day. You can check out Teddy at forex-trading-unlock.com. That's forex-trading-unlock.com. Teddy, you have a great week, safe week. Tommy and I look forward to speaking to you next week.
You guys have a nice holiday weekend. Enjoy yourselves and get some rest. Let's see you next
man.
You too, Teddy. Thanks, man.
Stay right there. Tommy and I come right back, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 140, Nasdaq's up 12, S&Ps are up 15.5. So take a look at this, Tom, okay? So we got to talk to our man, Mr. Basil Chapman, because Basil Chapman is from Cape Town. When he was a little kid, that's where he was.
Yes.
And look at this, folks. This is pretty intense. So great white sharks vanish from Cape Town, and no one knows why. Great white sharks, which support South Africa's shark diving industry, has been responsible for a number of fatal attacks off Cape Town, haven't been seen. So check this out. They haven't been seen in 18 months, folks.
Wow, yeah.
Yeah, is this wild? Between 2010 2016, they have shark spotting programs. Bottom line is that in between that area, there was 205 sightings of the fish off the beaches of False Bay. In 2018, that fell to 50. Now, check this out, folks. So this year, there hasn't been one sighted.
I know. How about 0? That's staggering.
Yeah. You know where they all are, folks? Down Cape Cod.
I was waiting for it. I know.
You listen, man, you know how these things move around. This is going to be really interesting. Further supporting evidence of the absence of these large apex predators There's a lack of any feeding or bite marks on the whale carcasses the city has removed from False Bay this year. Cape Town's municipality said in a statement, "We do not know how their absence from False Bay would affect the ecosystem. Neither do we know the causes for the disappearance." That's pretty wild, man. I mean,
yeah, and that's the type of stuff that you really don't know how, one ripple, right, can affect things in terms of an ecosystem. And you have the apex predator all of a sudden disappears. Well, there's always going to be one apex predator in the area. So who's the one that gets to feast on all that stuff now? Or how does that
and look at this
affect
picture, folks. If you get that picture up, that is False Beach, False Bay.
That's a great white man. Woo.
Isn't that sick?
Yes.
You better know technical analysis, folks, so that great white's going to get you in the market.
There we go.
Stay right there, folks. We got Fast Market coming up next. Then we get our man, Mr. Basil Chapman, Steve Rhodes, Date White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Stay right there, folks.